What is going on, investors? Hopefully guys are doing well out there. It's a gigantic earnings week with all the major tech stocks reporting their earnings this week, including Amazon on Thursday, July 28th. On today's video, we'll get you prepped for Amazon's earnings. We'll take a look back. We'll look at the trailing 12 months, look at the revenue growth. We'll talk about where analysts are anticipating this company going in the foreseeable future. Look at this from a valuation perspective, because certainly when we look at Amazon stock, look at almost any stock out there, this stock year to date is down 29%. But over the last couple of months or so, these stocks have started to find some footing at these levels. So we'll talk about, is this an opportunity to buy Amazon either before or after they report their earnings? We'll talk about some of the different business segments that Amazon operates under. We will do a sum of the parts, just a very brief valuation analysis over at Amazon. We'll look at Amazon.com. We'll look at Whole Foods. We'll look at Amazon Prime revenue. We'll look at the advertising revenue. We have to look at AWS, and then we'll come up with a valuation for Amazon based on the different business models that they run. Finally, we'll look at this from a technical perspective, like a lot of stocks setting up near kind of like 90-day highs, and Amazon is likely, in my opinion, probably to burst out over this or obviously come and retest the lows that we've seen earlier this year with the stock, depending on how those results come out. Now, like we said at the top, Amazon down 29% year to date. A lot of it has to do with the fact that their growth rate from a revenue perspective basically came to a screeching halt over the last couple of quarters. They pulled forward a ton of demand during the pandemic as people were staying at home and ordering a lot of things online. Their growth rate from a revenue perspective ballooned up into the 40%, but we've seen since Q1 of 2021, that growth rate is starting to shrivel up. In fact, the last quarter in Q1 of 2022, just 7.3% revenue growth over the past trailing 12 months over to Amazon. We've had $477 billion worth of revenue over at Amazon. Again, this is company-wide. We'll break down the little individual pieces of Amazon and look at some of the other business units more in depth. But before we get to that, I do want to look at analyst estimates for the upcoming quarter. Again, Q2 earnings are on Thursday, July 28th. Analysts are expecting about $119 billion worth of revenue. That would represent about 5.3% revenue growth year over year. More importantly than that, I think, is what analysts are anticipating for Q3, Q4, and Q1 into next year. And then certainly when you come over here and look at analyst revenue estimates, folks, they're anticipating this to re-accelerate back into kind of a mid-teens grower for the foreseeable future. Certainly, if you believe that is going to happen, might not necessarily be priced in the stock, because I bet there's a lot of people out there that don't think Amazon is going to be able to reaccelerate back into a mid-teens from a growth perspective. From an earnings perspective, those are expected to suffer into the second half of next year and then reaccelerate in a major way. I mean, we're talking about 100% type growth rate on those earnings heading into the back half of 23 and 2024. When you look forward 12 months over at Amazon, they're projecting about $537 billion. These are analysts anticipating Amazon's company-wide revenue expected to go to $537 billion. I told you over the trailing 12 months, you're sitting right about $477 billion. We will talk a lot about valuation when we discuss Amazon today. Right now, the trailing 12-month revenue price to sales valuation on Amazon sitting at just 2.6x. It's been much higher in the past. The trailing 12-month price to earnings is at 58. And there's probably a lot of people watching this video, certainly a lot of people on Wall Street, that will just toot the same old Finance 101 horn, and the fact that 58 times earnings certainly is expensive and certainly sounds expensive. But as we move through this video, I'm going to show you at least 4 or 5 businesses that Amazon operates that they've been able to build up by, instead of retaining earnings. So what you have to understand with companies like Amazon, like Apple, like any company out there, they can choose to retain earnings and keep those on the balance sheet, pay things like income taxes and corporate taxes. Certainly when the Bernie Sanders and the progressives that attack Amazon for quote unquote not paying any taxes, well, that's what you have to do if you retain those earnings. What Amazon decides to do with their earnings is they reinvest it into maybe buying Whole Foods. They reinvest it into Prime membership benefits like video and music. They invest and they build up an advertising business, which is now gone from basically non-existent a couple of years ago to now the third largest ad business in the world. And then obviously they built up AWS, which many people believe to be a $1 trillion company now. From a valuation perspective, again, price to sales, this one was much higher, trading north of 3-4 times sales. Now you're getting this one at about 2.6 times sales. Certainly from a price to earnings perspective, that's also come down as these giant tech companies that don't retain their earnings, that reinvested a lot into maybe acquiring businesses, growing certain types of businesses, expanding fulfillment and shipping capacity over at Amazon. A couple of years ago, only UPS and the Postal Service delivered your Amazon packages. Now the vast majority of Amazon packages are delivered by Amazon themselves. Guess what, folks? That took billions and billions of dollars, okay? You can't invest that type of money unless, one, you're going to borrow that money, two, you're going to dilute shareholders, or three, you simply retain any earnings that you've made from other parts of your business and reinvest it into other parts. So when we look at Amazon, what I like to do is kind of divide it the same way the company does deep into their financial reports. If you have not seen this, you've clearly not watched any of our earnings reports on Amazon. This is deep. I mean, we're talking near the bottom of the press release. Most people don't go this deep when they analyze companies, but you have online stores. This is your Amazon.com. You have your physical stores. This is primarily Whole Foods, but other physical stores that Amazon operates. You have your third-party sellers. This is probably the most underrated and most undervalued portion of Amazon business in my experience. And then we have subscription services. This is your Amazon Prime memberships. And then you have advertising business. And then finally you have AWS. Let's walk through these, okay? We'll start with just your Amazon.com. When you go to Amazon.com and you buy an item, now this is you buying an item on Amazon.com, and Amazon themselves are the one wholesaling, sourcing, warehousing, and delivering that product to you. Over the past trailing 12 months on Amazon.com, we call that first-party sales. Over at Amazon, you'll see me refer to third-party sellers. These are private sellers like myself, could be you out there as well, that you decide to sell on Amazon. That revenue and the revenue recognition on that comes separate on a separate side of the business. Amazon.com, you're looking at about $220 billion of trailing 12-month revenue. Now, believe it or not, there's not a lot of value in those first-party sales because, first of all, it's incredibly low margin. Think Walmart, think Costco, incredibly low margin. That's why when you look at Walmart's price to sales over the past trailing 12 months, they're trading at just a fraction of sales at 0.64 times. Target gets a slight premium at a 0.7 times sales on that. If you were to take these multiples that Walmart and Target get, you would get a valuation just on these $220 billion worth of sales between $140 and $156 billion. This is Amazon's online store valuation. I would assume this is pretty close. What you have to factor in when we walk through these price to sales, I'll give you companies like Walmart, Costco, Shopify, other companies that will compare Amazon's business to. What you have to remember is that if Walmart.com were to be bought out, someone would have to pay a premium well and above the 0.64 times that Walmart trades today. So this is a base case valuation that we're coming up with Amazon. I think 140 to 156 is very conservative. As we walk through these numbers, you'll see that. Now, Amazon operates numerous stores out there, primarily Whole Foods. They also have these Amazon Go stores, which have kind of walk-in and kind of take-out technology, which I think will be valuable in the company in the future. We won't necessarily talk about it on today's video, but I think that is something that could be valuable for the company in the future. But when we look at Amazon store sales, I would assume the vast majority of this revenue is either coming from Whole Foods or very unprofitable stores that they're operating kind of just as maybe more of a marketing, or certainly when we're talking about like Amazon Go stores, we're looking at it as kind of a proof of concept. So over the past trailing 12 months on the physical stores that Amazon operates, you get about $17.7 billion worth of revenue. I pulled up Kroger's and Albertsons price to sales, and they trade at just a minuscule time sales. And I would probably totally agree. If Amazon were to put Whole Foods on the open market, they wouldn't get a major premium on these sales. I would guess this business is at most worth about one-time sales. You're looking at about $3 to $17 billion on the stores they operate, with the upside that Amazon is going to be able to introduce some new concepts with some stores, and certainly that Amazon Go technology. They're able to roll that out to their own stores or license that to the likes of maybe like a 7-Eleven or other convenience stores. Certainly could be a lot of revenue in that sense. So Amazon operating those stores at a very low valuation, not necessarily a negative thing for investors in the future. Now, you heard me reference third-party sellers on Amazon. This is just your average mom and pop, or certainly some of these businesses have gotten really large, where they sell either goods that they buy wholesale, or maybe they are a manufacturer of goods and they're selling those on Amazon themselves. These are called third-party sellers. This is essentially a marketplace. Think like eBay. If you have something like a video game or something like that and you sell it onto eBay, I would assume that's very much the same. Now, some things to realize about Amazon's $105 billion trailing 12-month business on their marketplace. This includes some shipping costs that end up going to usually a UPS, a FedEx, or United States Postal Service. So baked inside this $105 billion, a bunch of that goes to shipping. So this is not quite as clean as when you look at it in eBay, and certainly like an Etsy, which are simply just charging a commission fee. Now, inside this $105 billion worth of trailing 12-month revenue over at Amazon Marketplace third-party sellers, you do have commissions and other membership fees that these sellers have to pay in order to sell on Amazon. I noticed that eBay's trading at about 2.86 times sales, and Etsy is trading at about 3.7 times sales. That gets us a very aggressive valuation just on the marketplace sellers over at Amazon. Again, you hear a lot about the advertising business. You hear a heck of a lot about AWS, and for good reason. A lot of people don't talk about just the marketplace value that Amazon has built up with all the sellers. I would estimate that's probably worth $300 to $400 billion. Certainly, if you couple it with the valuation of Amazon.com, you're looking right at that about $500 billion mark on that valuation. I think if Amazon spun out and created an own separate company for Amazon.com, just the buying and selling of those goods, I think a $400 or $500 billion valuation actually sounds pretty reasonable, if you ask me. Now, the other part of Amazon's marketplace and their Amazon.com sales is the fact that they got a ton of these people signing up for Prime. Inside Amazon's financials, they call this subscription revenue. This is primarily Prime. Obviously, we saw a price increase passed along by Amazon, and that price increase should start to trickle on. Obviously, most people renew their Prime membership on a yearly basis, so that price increase might not get passed off for a little while. Over the past trailing 12 months, Amazon Prime revenue coming in at $32 billion. I looked at Costco's price to sales. They're trading about one-time sales. The reason why I compare it to Costco is Costco's almost the same model as Amazon Prime. You basically have somebody pay for a Costco membership or a Prime membership, and then you sell them goods at a minuscule single-digit margin. That's essentially what Costco is. They traded about one-time sales. I also brought up Spotify on here. Very similar business model. You pay per month on a Spotify, at least for the premium subscription, but all they're doing is they're basically aggregating music and selling it to you on a subscription base. They trade closer to 2 times sales. They've certainly traded higher than that. If you want to put a multiple on Amazon Prime, you're looking probably at about a 1-time sales at about $33 billion, all the way up to probably about 2-time sales at about $62 billion. Again, if somebody were like Elon Musk was like, I just want to buy Amazon.com, okay, he would buy the online stores, Prime, and the marketplace. I think comfortably in that $500 billion mark seems reasonable. Now, another segment of Amazon's business that they've invested heavily into is Amazon advertising. And you look over the past trailing 12 months, you've got over $32 billion on Amazon ad revenue. This is bigger revenue than YouTube. This is bigger revenue than Nvidia. This is more revenue than Starbucks. This is more revenue revenue than PayPal. This is more revenue than Salesforce.com. This is a massive amount of revenue, and this is a business unit that is only a couple of years old over at Amazon. If we want to put a multiple on this, I think we can comfortably look at Meta's price to sales at about 4 times sales, and Google's price to sales is a shade over 5 times sales. You put a valuation on Amazon's advertising business, I think comfortably this is between about $130 and $175 billion. Now, finally, the gigantic one is Amazon AWS. Not only does this business unit over the past trailing 12 months has $67 billion worth of revenue. This would make it one of the largest companies in the world. And we're just talking about Amazon AWS. The other thing that separates Amazon AWS probably from some of these other business units is number one, that Amazon actually breaks out the operating profit from AWS. And so we get a window into a trailing 12-month revenue. You have over $67 billion worth of revenue, but on that $67 billion worth of revenue over the trailing 12 months, you have over $20 billion worth of profits. I pulled up IBM's price to sales and Oracle's price to sales. This is assuming we're looking like maybe 10 years down the road when AWS all of a sudden stops growing and therefore might not achieve like a big multiple. You're probably looking at 2 to 4 or 5 times on that sales mark. I think if you were to evaluate it now, you'd probably get closer to a 10, 20 times sales because of the rapid growth and the rapid profit growth that this business unit has. That's why I put a conservative valuation on Amazon AWS at about 130. I mean, we're talking about on the low end. I don't even think that is even possible. And on the more aggressive case, I think you could value this business close to 10 times sales. That would put you at 5, 6, maybe even $700 billion valuation just on Amazon AWS. And that's just not me speaking. There's several analysts out there, and this is probably too bullish for my taste, but some analysts project that Amazon AWS cloud unit is worth over $3 trillion. I've seen a lot of analysts say that this is worth at least $1 trillion. And you can see off of $70 billion worth of trailing 12 months revenue, $20 billion in profit. This is expected to grow to a $100 billion revenue business over the next 12 months. I think you could comfortably get 10 times sales if you were to put this up on the open market. Something like that, probably worth $1 trillion. Now, from a conservative perspective, we're looking at Amazon's valuation right now trading at about $1.25 trillion. If you were to buy Amazon on the open market, that's what you're paying from a valuation perspective. I talked about how Amazon's online stores probably worth about $150 billion. Amazon AWS on the high end, at least $500, $600, $700 billion. Amazon subscription model, that is Amazon Prime, probably worth $33 to $60 billion. Amazon's Whole Foods, not a very valuable business, but important inside of Amazon's flywheel. Okay, probably worth anywhere between $5 and $10 billion. Amazon's Marketplace, this is probably the most undervalued portion of Amazon's business. I think if you were to combo the sale of Amazon's online stores and the Marketplace, you'd get a combined value in that $500 billion range, with the vast majority of the premium going to the Marketplace sellers. Since you're just simply collecting a commission, it's a very easy business to operate. Just ask eBay, which has been operating that business for over 20 years. And then finally, you have Amazon advertising, which I think we can very comfortably say is probably a $130, $170 billion company. So that means on today's market, from a conservative perspective, I think you've got a valuation just under $1 trillion over at Amazon. On the higher end, you're probably looking at about $1.3 trillion. This, again, assumes no premium. If you were to put this on the open market and Elon Musk were to put in a bid, or if you were to spin this off into its own public company, you certainly would get a higher multiple in that case. That is showing me today, based on just kind of the dinner napkin math that we did here, this company at $1.25 trillion is not wildly overvalued. And the other things that we didn't talk about is, number one, the fulfillment network, which is the delivery of the packages over at Amazon. That business is probably worth tens of billions of dollars, with the potential to maybe scale up to the size of a FedEx or a UPS one day. And we also didn't talk about some of the other growth drivers that they have, including healthcare, which we've seen a number of acquisitions that Amazon has made into that. All things being considered, very, very fair valuation for Amazon. And I don't think that necessarily has been the case over the last year or so as this stock traded at this upper range over $150 per share. More recently, the stock has sold off. It's retested this $100 level over at Amazon. More recently, though, we are making some lower highs on this one, but we have not been able to get solidly above $125 per share over at Amazon. And that's where this one is setting up heading into earnings on Thursday, July 28th. If Amazon, I think there's some growth drivers for Amazon. Number one, this most recent quarter, my guess is probably going to come in line where analyst estimates are, right in this 119, 120 billion. It's really going to be that Q3 guidance that we get from Amazon. Are they able to meet the street expectations to go? Look, we've been in single-digit growth mode for Amazon for the past 3 quarters. Are they going to be able to just magically reaccelerate that into Q3? Obviously, you have Prime Day in Q3, so that could be a factor in Amazon be able to achieve 14% year-over-year growth on that revenue side. But if we get indications that Amazon will get to about $126 billion worth of revenue in Q3, I think that will be at least bullish for the stock in the shorter term. A bullish move on Amazon could potentially pull this one over the $125 per share range. The reason why you have a lot of sellers step in, because look, if these sellers dry up at 125, we don't see a lot of resistance to get up to the 130, 140 range. There should be some natural resistance here if you have a really bullish report, which I don't anticipate from Amazon or really any company in the coming week. But if, look, miracles can happen, you get a really bullish report, I think you should see some resistance up at 150. So you got strong upside in this one. I think a decent report puts you up into the 130s. A pretty good report puts you up into the 140s. And an astronomically unbelievable report puts you in the 150s. I think the probabilities of that are extremely low, but you got pretty good upside in this stock. $10, $20, in my opinion, could be achieved simply if Amazon just reaffirms what Wall Street is anticipating. Again, resuming double-digit growth on that revenue side. Now, the bear case scenario, I think, quite frankly, is about $20. We come back down here and retest 100 on this one. That's been a clear area of support, at least over the last several months for the stock. Buyers have stepped in right here at 100. If you do slice through that, there is even more demand for the stock down south of 100. That's an area, quite frankly, under $100 is really where you start backing up the truck with Amazon, because we start to factor in all the different business units that this company operates under. And when we look at a trailing 12-month basis, this company is very conservatively valued almost where it's at. And again, we're looking backwards. Amazon Web Services is probably going to grow 20 to 30% over the next year. Amazon's subscription business with the price increase of Prime probably going to grow another 20%. Amazon's marketplace sellers likely to grow. Amazon's advertising business, probably on the low end, going to be a mid-teens grower, maybe to the high end, upwards of 30% growth over the next 12 months. So when we sit here a year ago from today, the base case valuation might be much closer to $1.5 trillion, maybe even as high as $2 trillion, depending on how well things go with Amazon. We'll certainly be here on the channel to monitor them. Again, earnings coming up on Thursday, July 28th over at Amazon. We're expecting $119 billion worth of revenue. That is just 5.3% growth. But more importantly than that, what we're looking for is confirmation that this company will go to a mid-teens grower for the foreseeable future, because that is what Wall Street has laid out for Amazon over the next year or two. If they're able to achieve this, that'll certainly be bullish for Amazon stock. Hopefully you guys enjoyed today's video. Stay tuned for more this week here on the channel, as it's a gigantic earnings week. Hopefully you guys have a great day out there, and good luck with your investments.